What's up everybody, your typical bull here. In this video we are going to be talking about taking profits. When do you take profits? Where do you take profits? How do you take profits? And there is not one clear-cut answer to this. There's a lot of ways you can go about doing this, and there's a lot of ways that are going to work. So you have to kind of figure out which one is going to work for you. Okay, so let's get right into it. But before we do, please do remember to smash the like button and subscribe and comment. It is very much appreciated. So right out of the gates, we're going to be talking specifically about positions where you just take one options contract, or you have maybe just 100 shares, right? And then we'll talk about some other things like scaling, right? So right out of the gates, let's assume you have one contract. So for the purpose of this video, we are currently looking at AMC, and today it did some pretty crazy stuff. And I actually did have the fortune of playing this spike and this one, so we did pretty well there. So in scenario one, let's just assume you got in at the perfect location. You bought in right here. You bought one contract, so all you have is one. So now in this scenario, let's assume we bought in right here off the 200 average. We set our stop loss right here, and now we've decided that this pivot is our target. So scenario one, you get to that location, you just take your profits, you get out. That's a good trade from 1860 to 19 something ish, right? That's a great trade. Scenario 2 here is you let this run until you create some special condition, and in my scenario I use the 5-minute candle to close in a new low, right, or to break the previous candle, the previous bullish candle's low, right? So in this scenario you wouldn't get out at this pivot. What you would end up getting out at is this next candle's bullish. This candle closes slightly higher, so it's not quite an exit yet. This candle right here closes. That is the exit, right? You close in a new 5-minute low. So you get slightly more profits than you would from this pivot, but it is almost not much, non-existent at all. So scenario 1, you just take hard target with them and you get out. This is where I suggest you start. Make sure you're focusing on risking 1 to make at least 2, possibly even 3, right? So scenario number 2 is, let's say you have 2 contracts, right, instead of just 1. Same trade. Let's say we got in here again, still stop loss below the 200. So back to the whole target thing. So now let's say this is a risk. Now we can have 2 targets, right? So this pivot here would be target number 1. In this scenario we sell 1 times contract. So now what do we do with our second contract? And what I suggest is now you move your stop loss to break even, or even just either break even if you want to give it some more room, move your stop to break even. So now you can't lose money, it's impossible. Or let's say now we're going to trail up our stop, right? So we hit our first target, maybe now we see this candle breaks. Let's say, okay, we're going to use the 9-day EMA here now. If we break the 9-day EMA and close, we're going to get out. This one doesn't break. This one doesn't break. This one doesn't close below. This one doesn't close below. This one doesn't close below. This is the exit here. It breaks the 9-day EMA. We close below. We're out. So what do we end up getting? Just slightly more profit here. Another scenario is we use target 1, and then we use our chart to find another target, which would be our target 2. So in this scenario we don't really have any pivots above us, right? Like there's nothing here, so we would have to go to a higher time frame to find that target. You see there's nothing here close. Okay, so now there's nothing here on an hourly chart. Let's peep at our daily chart. Where would our next target be? So in this scenario, what we get is before this day starts, we have a pivot here, we have pivots here, and then we have a pivot kind of in this area here, right? So we never quite hit that one. So this is a supply level, right? If you follow some of my other videos and you know how to draw your supply and demand levels, this would be the base of a supply zone, right in here, this area. Cool. So 2 pivots. Now, same trade. We have this daily pivot here. Okay, now maybe we have 2 targets, right? So target 1 and target 2, the daily level, right? So we get boom, and we hit both of those targets. And then same story, if we have 3 targets, this would be target 3, which never hits, but you steady trail this stop up with your final position, right? So there are a lot of different ways to go about taking profits. As long as you always get at least 2 times your risk, you are going to be fine. So something I do want to talk about, if you ever get the opportunity to take 100%, me personally, I'm going to do that every single time. If I pay $30 for, let's say, 3 times options, right? So that means I paid, you know, $10 a piece. Right, so I bought 3 options, I paid $10 a piece. Now let's assume that I can sell these options now for $15. So what happens if I sell 2 of those options for $15 is I cover the risk of the entire position. So now I have 1 times free contract that I can do whatever I want to because it's free. It's 0 risk here. I can hold this all day, doesn't matter. I literally cannot lose money on this play. I will do that every single time. 0 questions, no hesitation. Alright, so let's talk about a couple of other things. For starters, you don't have to hold the same position, right? So if I buy, let's say I buy, in this scenario, I bought the 19 call right on AMC. Let's say up here, that 19 call, I paid, let's say I started out with $1. Now let's say up here, that 19 call runs to $1.50. I can sell the 19 call, and then maybe now I'll buy the 20 up here. Let's say I buy the 21 call for $1. So what did I do, right? I sold the 19 call for $150. I bought the 21 call for $1. So now essentially I have a position that I have a $50 risk in because I locked in $50 more in profit already for this last one. So you roll up your options, right? Now it gets interesting as well. If I bought multiple of these 19 calls at $2 and lock this in, I could maybe even play this 21 call essentially for free. So if I do that too, I've got $300, right? So that's basically essentially this option, totally free, risking only profits. This is what we talk about when we're talking about rolling up an option. So there are a lot of different ways, and the way that I suggest you start is just be happy taking these low-hanging fruit targets. If you get in here, you're risking this to make this. That is an awesome trade to take those targets. And then maybe when you get into doing 2 targets, you start out using 2 targets, and then maybe you get into using 3 options, you start out using 1 hard target, and then the second hard target, and then maybe you trail the final part of your position until you get stopped out at some location or other. Anyway, hope this helps. That's going to pretty much about do it. Find your own way, find your own path. I would say, like I said, start out using one hard target, then two hard targets, and then scale out of once you get into using like 3 contracts-ish. So you never know what's going to happen tomorrow. You never know what's going to happen in the next 5 minutes. This could have just as easily hit this location, and then you decide, oh, diamond hands to the moon, AMC forever, and then what happens is it tanks out on you, and it happens all the time. People get greedy and they don't take their profits, and then they end up giving them all back. Scale out of your positions. If you've only got one contract, take the low-hanging fruit targets. There's always going to be another trade. I will see all of you in the next video. Cheers.